But even crude prices are seen easing. Crude has Brent crude that has dropped below that $75 per barrel level. Remember, from the September high of $97 per barrel, crude prices have now slipped 23%. But why is the crude prices falling, and what are the implications on the oil companies? Well, we have Somit joining in with more details on this. Good morning, Somit. Take us through this. The oil prices easing of impact.
Well, a couple of reasons for the fresh drop in the Brent crude prices. Firstly is the demand concerns coming out from China, and second is the fact that investors are now doubtful on OPEC plus a successful implementation of this production cuts. Now, because of these two factors, they're expecting the oil market to be in surplus, and hence we are seeing this fresh drop when it comes to Brent crude prices. Now, when it comes to the Indian economy, India imports nearly 85% of the crude requirement, so definitely this will benefit the Indian economy. And as per analysts, every $10 per barrel drop in average crude oil prices deflates the current account deficit by around 14 to 15 billion US dollars, which is nearly 0.4% of the GDP, and it also decreases the retail inflation by around 50 to 60 basis points, and wholesale inflation comes down by around 125 to 135 basis points. But when it comes to companies, a host of sector stand to benefit because of lower crude oil prices. Firstly, when it comes to oil refiners, they are one of the major beneficiaries because lower crude oil prices boost the gross marketing margin that the oil marketing companies earn by selling every liter of petrol and diesel. Now, earlier it stood at around 10 rupees on petrol and 3 rupees on diesel. Now, this would further boost for the oil marketing companies if crude prices continue to remain lower at around $75 per barrel. Now, this will, however, benefit the oil marketing companies only. Now, when it comes to pure play refiners or the standalone refiners like MRPL and Chennai Petro, or for that matter Reliance Industries also, they would stand to lose because of this sudden drop in crude oil prices, because there would be a significant inventory losses for the pure play refiners. Now, when it comes to oil explorers like ONGC, Oil India, Vedanta and HOEC, now it will be negative for them because crude is the main product, and with low crude oil prices, their realizations come down, which have a direct implication on their margins and earnings. Now, generally a $5 per barrel drop in Brent crude prices would impact the EPS of ONGC and Oil India by around 7 to 12%. When it comes to paint companies, it's beneficial because nearly 40% of the raw material cost is either directly or indirectly related to crude derivatives. Aviation companies also stand to benefit because nearly 40% of the total cost is fuel cost, and when crude oil prices come down, the fuel cost also reduces. Apart from that, there is lubricant manufacturers, tire manufacturers, cement companies, and a host of specialty companies that tend to benefit because a major part of the raw material cost is either directly or indirectly related to crude oil prices. And whenever crude oil prices come down, their raw material prices also go down, which directly benefits their margins going forward.
Absolutely, Somit. Thanks so much for taking us through that. A lot of sectors getting affected by all these moves that we're seeing in crude right now.